Research shows that there are two main ways to boost plan participation and savings rates. 1. Show them an age-adapted picture of themselves at retirement age. And 2. Show them how their monthly income will change if they start saving today. Unless you're an accomplished sketch artist, I'd recommend using the My Paycheck tab inside RetireMax. When you open the tab, you'll notice that below the advisor data field across the top, you have client and spouse. You can click on either of the two. Clicking on either the client or spouse will show the paycheck information that was entered from the data entry page. The Client tab shows there are 3 different scenarios you can use to illustrate saving different amounts of money. The type of pre-tax retirement plan shown here is carried over from the data entry page. An example of putting $500 into the 403B cell will illustrate how the net paycheck is affected. Notice the federal taxes change from $400 down to $325, saving $75 a month in income taxes. You can also see that their net pay will go down from $3,000 to $2,575, or it will cost them $425 to save $500 into the 403B. What if the client said they could afford $500 per month? In that case, you could enter the $500 into the Can Afford cell, located below the Net Pay and Difference cells. The software will convert that number to a gross retirement dollar amount, calculating the tax savings along with the Can Afford amount. You can see in the 403B cell that it's $588. It's saving an additional $88 in income taxes. The federal taxes are going down from $400 to $312. Depending on what you would like to illustrate, you can use either the Can Afford amount cell or the retirement account cell. If you enter a number directly into the retirement account cell, it will cause the Can Afford amount to go to 0. So when do you use the retirement plan cell versus the Can Afford cell? If a client says, I want $500 going into my retirement account, you input the $500 in the retirement account cell. However, if the client says, I can afford $500, you would then enter the amount into the Can Afford cell, and the computer would put $588 in the retirement account cell, which includes what they can afford plus the tax savings. So you can illustrate it either way. Note that if the advisor is in a state that has a state income tax, a percent of the state income tax will also be saved as a new retirement amount is inputted. The state income tax savings uses a ratio of state tax to net taxable income taken from the original paycheck. Depending on the state, the tax savings from the percent ratio may vary slightly from the actual paycheck state income tax savings. This is a basic illustration utilizing the My Paycheck tab to show an amount going into a qualified retirement plan and how it would affect the net paycheck. In new number 3, the second scenario, I'm going to show saving $500 into a Roth 403B. Tap on the cell and put $500 into the Roth 403B. You can see that it actually reduces their paycheck by $500, from $3,000 to $2,500. And of course, there are no tax savings up front from the Roth. Under the after-tax deduction header, the payroll savings line allows you to use part of the payroll savings to go into the retirement plan. This money can be used to either offset the cost of the retirement plan or increase the amount going into the retirement plan. In new number 1, as I lower the amount going into savings by $100, you can see it reduces the cost by $100. And in new number 2, it adds to the 403B amount because the Can Afford amount adds any additions to the 403B instead of reducing the net cost. You can also illustrate a client buying some after-tax payroll deducted insurance. It will simply reduce the net paycheck by the amount inputted into this category. If you're going to use part of the tax refund to help offset the cost of the retirement plan, under the W-4 information header, the monthly refund to save line allows you to input the monthly amount of the refund you intend to use. We recommend that you never use all of the refund. Leave at least a $500 refund and confirm that the client actually gets a refund through their current 1040 information. Note that you input the monthly amount of refund you intend to use, even if the pay period is different than monthly. The software will convert the monthly refund to the per pay period. In new number 1, you can see as I put $100 into the refund cell, it will do one of two things, depending on whether the Can Afford cell was used or not. If the retirement cell is used, you can see that the net pay is now reduced by $325 instead of using the previous $425. However, if the Can Afford cell is used, as in new number 2, the refund becomes part of the retirement sell amount along with tax savings. The new retirement sell amount is $706, with the can't afford amount staying the same at $500. In new number 3, the $100 refund reduces the cost of the Roth by $100. In new number 3, I'll illustrate how the refund can be used to offset the cost of a life insurance premium paid by the client, not payroll deducted. Notice that when I put $100 into the refund to use cell, the net pay goes up by $100. Then, when I put $100 into the life insurance cell, the net cash flow goes down to 0. Whenever a refund is used, a new W-4 form would need to be filled out. Also, please note that if the amount you enter into this cell exceeds the amount of the withholding tax on the paycheck, it will not utilize the refund. The amount inputted into the monthly refund to save cell needs to be less than the paycheck's federal withholding amount and the amount that will be saved in taxes. It's important to note that you can't save a client more federal taxes than what is being withheld out of the paycheck. In this illustration, I cannot save my client more than $400 per month in refund and tax savings. The line just below the monthly refund to use line is the monthly additional withholding. If a client is under withholding their federal taxes, an amount can be entered into this cell, and it will correct their W-4 withholding to help them correct underpaying their federal taxes. The capital conversion line is used when a client wants to illustrate increasing their payroll-deducted retirement savings amount and offsetting the reduction in their net pay through converting money being transferred from a bank account. To illustrate this, let's assume a client wants to convert $6,000 from a bank account to their payroll-deducted retirement savings account over 12 months. We would increase the retirement savings amount by $500 a month for 12 months using the can't afford cell. Notice the retirement amount is $706 with a net difference of $500. By inputting $500 into the capital conversion cell, the cash flow difference is now 0. The projected values section allows you to project values of whatever retirement plan is being illustrated. You can set the interest rate and the number of years, and then it will illustrate the projected values. Notice with the orange tab, you can move between the different retirement plans or illustrate them all. Now, we know that was a lot, but this business always comes down to what someone can afford per month, and it's your job to help them find it. Use this tab to uncover money, recapture taxes, reduce waste, and maximize your client's net worth. All the above just leads to more happy clients, more referrals, and more AUM. That's what we at RetireMax call a win-win-win.